Has a sell on it today. If I crossed out the word sell and I read it, I would be buying. I mean, it's that positive. It's about robotaxi, and it's about the total addressable market. And initially, Tesla won't do that well. But I've got to tell you, I would never sell Tesla in this.
That was Cramer on the show last week, challenging this note from Guggenheim on Tesla this morning, or actually last week, which did explore the potential risks with the robotaxi push, which we're getting closer to that June 22 date. Joining us this morning is the analyst behind the sell call, Ron Jewsikow from Guggenheim, who joins us here at Post 9. It's good to see you, Ron.
Thanks.
We've been talking more and more about the split between the price and fundamentals on this name. Has that been confounding to you?
Yeah, absolutely. I think went back to when we downgraded the stock to sell, if you had told me 2025 earnings estimates would go to under $2, we're at $1.40 for the year, from $10 when we downgraded it, I would have done it again. I think a tremendous amount of the value in the stock is embedded in the robo-taxis. Our issue with it is there are tremendous technical hurdles to getting there. Ultimately, the unlocking the TAM is going to be very challenging because the U.S. is not that dense. Getting the cost per mile low enough that it will displace car ownership is going to be challenging. And we think the stock is embedding something like 10% of all miles traveled being on the robotaxi network sometime between 2035 and 2040.
But when you're talking about the TAM, it doesn't sound like you'd be that much more enthused about Waymo or any other player in the space.
Yeah, we don't formally cover Waymo. I think what we see as the near-term opportunity for robotaxis, near-term being 5 years plus, is primarily going to be either supplementing or displacing ride sharing, and that is a big question among investors. Is this going to be going over the top of ride hailing, or is this going to be something that ride hailing uses to augment their network? We don't cover the ride hailing industry, but I think that is probably a more salient investor debate right now.
Ron, what are the technical problems that you believe they haven't been able to surmount?
Yeah, I mean, I think if you look at the FSD data, and it is pretty limited, Tesla does keep it pretty close to the vest. But if you look at the FSD data online, what is widely available, the system does struggle in fog, rain, direct sunlight. Elon on the last conference call did say that those are not technical problems he is concerned about. But the data we have available to us and all of the kind of experts we have talked to about camera-only autonomous systems do suggest that it will struggle in certain weather conditions. And it's tough to have a robo-taxi network if it doesn't work rain or shine, because ultimately demand is highest when weather's the worst.
And no signs that they've been able to surmount those, at least in Europe, based on the data that you've been able to see. Obviously, he clearly says we're better than LiDAR and radar in terms of what Waymo has, and our neural network ultimately, and the data that we have is going to enable us to be able to surmount any of these issues in the near term. Yeah,
no, it's a good question. Nothing we've seen in the data suggests they have solved this problem, but they are very confident that they either have or will solve it based on their public messaging. I think where we struggle is if they cannot solve it with camera only, or if it's limited in scope and scale in terms of the times it can operate, ultimately this TAM doesn't get unlocked, right? Or it gets solved by another provider. And if they have to solve it a different way than they've promised, what they've promised historically is this generalized approach to autonomy. That's not what we're getting in Austin when this launches in a couple of weeks. The approach that's launching in Austin is a different version of FSD. Elon has said that publicly. It has 4 times as many parameters. Then you have questions of if the current fleet of Teslas is powerful enough, the inference compute on the vehicles is powerful enough to run FSD. And if the fleet doesn't benefit Tesla's robotaxi argument, then we think this is something like $500 billion of spend over the next 15 years to actually unlock even just 10% of this TAM. And this is a cash-burning business today, we think, this year.
You do think it's going to burn cash, especially with credits potentially going away as well. I think that's got to be another headwind for them, right? In terms of
yeah, exactly. The credits will certainly hurt the business. Tesla's not alone in that. I think all electric vehicles it will be a headwind for. They're losing share in China. You're seeing a tremendous amount of competition from Xiaomi, BYD, and others. And we think the business is basically X growth in China. I think it's a debate if it's X growth in the U.S. and Europe. But we've seen the Model Y, the refresh hasn't unlocked new demand. The Model 3 refresh hasn't unlocked new demand. So we're very confident it's cash burning this year. I think the question is it cash burning next year? And that is before they have to lean in to spend on this robo-taxi network. It's really heroic what investors have to underwrite here, is a business that generates no free cash flow, valued at $1 trillion. And while we get painted as bears, and I think that's fair, we have a sell rating on the stock, ultimately, I don't think valuing this as a $450 billion business that's not generating any cash flow feels that bearish to us in terms of the valuation lens.